Sports insurance is part of the game. Whether it's to help land a star player or open up salary cap flexibility, specialized insurance policies can do more than just cover a loss. They can also evac your favorite team's roster. In big money team sport, risk and liability are part of the game. Players and organizations alike seek insurance coverage that can protect them against major loss, and strategic use of policies is becoming a game changer. Our goal looks to underwrite a risk throughout the world on both an individual and an organizational basis. We can insure everything from jockey to premiership footballers to baseball and basketball players in the US, said John Moffat, head of specialty at Argo Global. Professionals generally insure themselves against loss of future income due to injuries, while organizations seek to insure players either for their asset value or for wage protection when insured. We don't like unusual sport like kiteboarding as much, Moffat joked, explaining that the more popular sport had larger pools of wealth from which to draw. Pre-existing conditions are excluded from coverage, as are body parts that put the athlete at higher risk of injury due to recurring injury, position, or playing style. If they have had significant injuries and keep having recurring problems, and are not fully fit at the time of underwriting, may exclude certain body parts, Moffat said. Sometimes a player will be denied outright, and other times they may be offered to extend their coverage to previously excluded body part at a higher premium known as exclusion by basis. Take a look at three ways in which specialty insurance can affect your favorite team. Loss of value policies are an NCAA recruiting tool. NCAA already requires that all student athletes have health insurance in case of injuries and enrolls every athlete in additional catastrophic injury plan that kicks in when medical costs exceed $90. Loss of value policies go a step further, insuring athletes against loss incurred in the event of injury or illness that significantly drop their pro-draft stock. This policy typically over 50 to 60% of the athlete projected rookie deal. In 2015, University of Oregon cornerback Ivo Ekpreolamu became the first NCAA football player to benefit from a loss of value contract. Anticipated to be a first-round NFL draft pick, Ekpreolamu collected roughly $3 million because he dropped to a sixth-round prospect after tearing his ACL and dislocating his knee during his senior season. If he fails to play in the NFL, he stands to collect another $2 million. The NCAA permits universities to pay for loss of value policies using student assistance funds and in 2014 began allowing student athletes to borrow against future earnings to pay for their premium. Universities are now beginning to cover student athlete insurance premium. Moffat prefers not to write loss of value policies, citing the difficulty of insuring an athlete who has not yet turned pro. I don't like coverage at all, Moffat said. You have got to have an established value in the first instance. You don't know if are going to get to their true value anyway. Any future earnings are all up in the air and the true value is subjective. This is why the NCAA recommends that only athletes who expect to be among the top 10 players in their respective draft purchase loss of value coverage. However, with universities willing to pay student athlete premium as a means of recruiting talent or retaining players for their final years of eligibility, more student athletes seek loss of value policies. Insurance evac roster construction. Contract insurance makes a clear difference on a team roster management when expensive players have to leave the sport earlier than anticipated. On some occasions, these insurance-related issues can lead directly to player movement. When NHL player Nathan Harton's career ended due to a back injury in 2013, the Columbus Blue Jackets still owed him $26 million, over 10% of the team's $200 million value. For a budget team, paying that much to a non-roster player was out of the financial question. Thank you.